As tax season comes around and everyone starts preparing their taxes, I think it's appropriate that we talk about this topic because I think it's that meme of I don't know and I'm too afraid to ask. We all understand what taxes are because we get it taken out of our paychecks on a monthly basis, but I think there are a few questions that a lot of people are wondering, and that's exactly what I want to do with the video today. I'm going to cover some of the very simple questions that a lot of people have based on my conversations and also what I've seen in social media, and hopefully you can get something out of it. Let me just give the caveat that nothing in this video should be taken as financial advice. If you have any questions, make sure that you consult an expert. But let's get to it. So this video kind of covers the basics for the average American, which is someone like myself that has a 9-to-5, one source of income, and they usually file taxes by using their W-2 as the source. W-2 is just that form that you usually get in the mail from your employer showing how much money you made, what you paid in taxes, etc., etc. So as far as why you file taxes, let's say theoretical that someone makes $100,000 every single year. Now, when you agree with your employer to make $100,000, what your employer does behind the scenes is that they go to this chart, depending on the year, and they basically calculate how much money you should be paying in taxes based on how much you're gonna make. And based on those estimates, your employer will take away money out of your paycheck every single time you get paid and just pay the government directly by paying your taxes. That's the reason why if you make $100,000, you won't actually get $100,000. You will get $100,000 minus the taxes. But what happens is that the calculation between what your employer estimates that you should pay in taxes and what you should actually pay in taxes based on your personal circumstances are usually different. So when you file taxes with the government, you basically show a piece of paper that says, hey, this is how much money my employer already paid you because he kept that money every single paycheck. But based on all these situations, I should actually pay this amount, which is different. And that amount can be higher or it can be lower. But all those items that made a difference between what your employer said you were gonna pay and what you should actually pay usually comes because of deductions, which is the next one. So deductions are just legal ways to avoid taxes. Now, I did a video a few years ago where I explained how taxes work, which you can check it out if you don't know. But if you do know, you know that based on your salary, there's an amount of money that you're gonna be taxed on. And what deduction does is that it helps you decrease that amount of money that you're gonna pay taxes on, even though your salary stays the same. So to give you an example, let's say that you make $100,000, but you also contribute $6,500 to your traditional IRA, which is a very common deduction, that will naturally decrease the amount of money that you pay taxes on from $100,000 to $93,500. Now, there are hundreds of deductions that you can claim out there. Some are more common than others, but the ones that will usually apply to people watching this video are these. Comment below if you want us to do a video about any of them or many more. Now, there are basically three options to file taxes, and I'm gonna cover them from less common to more common. The first one is you can do them yourself. It is completely legal for you to file your taxes, and actually if you look at all the tax forms that we usually use, they have instructions specifically about how you can do them yourself. I've never seen this except for people that are actually accountants, so I don't know if it would apply to anyone here. The second one is you can hire a CPA, a certified public accountant. Usually people that make a lot of money or are a little different than what I mentioned at the beginning, which is that they have more than one source of income, different companies, they sold the house, they sold the car, usually want to do this because it's just a little more complex. And the last one, and the most common, I would say, is that you use a software. So you basically use a system in your computer that you can access online usually that will do everything for you. The most common one, the one that I use and most people use, is TurboTax. TurboTax is a website that will walk you step by step on how to file your taxes, ask you all the information that you need, try to find all the different deductions and help you throughout the entire way. It is very affordable. I think it used to be free. Now it's anything between like $50 to like $200 depending on the state and a bunch of other things. I don't get paid by TurboTax, at least not yet, but I do really think it's one of the best options because it's very simple, it's very comprehensive, and pretty much everyone can use it. That's what I use, and even Barney, the other co-host on the channel, being a CPA himself, uses. And actually I've seen the majority of accountants use TurboTax because of how simple it is to use it. Now, when you file your taxes, there's basically two things that are gonna happen to you. Well, there's technically three, but there's primarily two things that can happen to you. You're either gonna owe the government more money than you actually paid through your employer, so you have to make a check to the United States Treasury, not the best case, or you're gonna get a refund because basically your employer paid more money than you should have. That's usually the case because your employer does a calculation, but then you also get a lot of deductions that help you decrease the amount of money that you should pay in taxes. The third case was that you break even and the answer is 0, but that has to be like super specific and I haven't really seen people that has happened to. But what I do want to point out is if you do get a refund, which is the majority of the cases, the way it works is that you provide your bank account and they basically ACH or just transfer the money directly to your bank account within a very short amount of time. It's like less than a month. The reason why that happens, and what I wanted to point out to you, is that the United States tax system, primarily for people like myself that have one source of income, is completely an honor code. They basically get your return, they look at the amount of money that the return says that you should pay or get refunded, and they will credit that to you. That's the reason why you get the money so fast. Now, what they do have is that they have some automatic checks that will raise any red flags in case that you do something fishy. If they do find something fishy or you're selected at random, they will audit you, which is not super common, but I do want to cover it. So being audited means that the government or the IRS wants to take a closer look at what you said in your tax return. Because the reality is you can say whatever you want in your tax return as long as you can prove that it's legal. So when the government finds something fishy through those automatic checks or you're selected at random, they kind of have someone physically sit down and look at your tax return. They usually ask you to send additional evidence or forms, or they might want to ask you a few questions, which is the reason why a lot of people like using a CPA instead of TurboTax. If you were to get audited, you need to have a professional, probably, to testify in your case and show that what you did was legal. So that's why a lot of people use a CPA, but even TurboTax gives you the option of paying an additional fee that will give you representation in the case that you get audited. But like I said, you will only get audited because either you have something fishy going on or you're selected at random. And like you can see in this chart here, for people that are in the lower to mid-level incomes, like the people watching this video, usually have less than a 1% chance of getting audited. Usually the people that get audited are the ones that make over $10 million, the uber wealthy like Trump, which is why you saw that in the news all around a few years ago. But it can happen to you, so make sure that you're careful because I know a few people that have gotten audited and they're not ultra wealthy. And one last thing, as you may know, Barney, the other co-host of the channel, is actually a CPA himself. So he's supposed to be like a tax expert. So hopefully he will do a video about it in the upcoming weeks. But if you have any questions or anything else that you want to see, leave it in the comments so we can do it for you. Thank you so much for watching. Hopefully you get a fat refund. I will see you next time. Peace.